Hey everyone, happy Monday for December 18th. Hope you all had a great weekend. I don't want to call it a Christmas miracle quite yet, but rates did rally last week. We have been waiting for it all year, and we finally saw some great improvement in the mortgage world. Rates are down again in the low sixes, trending in the right way as we head into 2024. Inflation seems like it's getting to be under control, and the Fed is giving hints that they're going to pause interest rate hikes for next year. So lots of good headwinds as we go into the new year. So I'll hand it over to Eric for further explanation on all that good stuff. But again, to you guys all, thank you very much for your business and your referrals in 2023. And I look forward to growing with you all in 2024.
Everybody, Eric Hendrickson giving you the Mortgage Minute for the week of December 18th. Well, last week was it was a very positive one for mortgage rates. We had a few things happen. We had the Consumer Price Index come out, and again, it showed inflation continues to moderate. Really came in at expectations, which were that of moderation. Wednesday, we had the big Federal Reserve meeting, and they decided to continue to hold rates constant, which pretty much was the expectation. The positive news in it all is the post-meeting press conference, Chair Powell spoke to the fact that there's been significant progress made on inflation. Supply chains are easing. Really didn't come out with quite the hawkish tone he had in the past, so that certainly was helpful for the markets. And then we did, kind of rounding things out, have the Producer Price Index, another inflation report that showed that input costs for businesses actually were below expectations. So overall, a positive week, and the net result for mortgage rates was another significant decrease overall, which puts us really in the past 5 weeks one of the single largest drops in mortgage rates that we've had kind of in recorded history over the last 50 years. That's the good news. You know, the not so great news is they're coming down from a very high level. So from somewhere up in the mid sevens, we're kind of down to the mid to lower sixes on average for the 30-year fixed rate conventional. So great progress. We're not necessarily in the range where it opens up a lot of refinances, but I do think it makes people consider possibly selling their house and making a transition, since that new old spread for old mortgages versus new mortgages is narrowing and kind of getting inside that 200 basis point range and below, which I think really gets things rolling. So overall, we're going to celebrate the victory this week. Pretty quiet one with the holiday coming up on Monday. You know, traders might be off, so you might have a little volatility in the bond market, but I think things will stay relatively static. And then it'll just come into post-holidays. We'll continue to watch inflation reports. So we'll keep watching things. Have a great week.